Hello, this is Saku VietnamStock. Let's review the performance of the Vietnamese stock market for the week of December 23rd to 27, 2024. VN 100 index rose by 2% from 1,306 to 1,332. The index was flat on the 23rd and 24th, but on the 25th, it surged dramatically in what could be described as a Santa Claus rally. This rally shifted the cautious market mood to a positive one, supported by a significant increase in trading volume. Riding this momentum, the index continued to rise steadily on the 26th and 27th, closing the week on a high note. For sector performance, the market saw a mix of gainers and decliners, with all sectors moving within plain Lister 3%. This indicates that the market wasn't as buoyant as the Christmas rally might suggest. Top performer, financial sector, plus 2.4%. The financial sector, which accounts for nearly half of the VN Index's market capitalization, drove the index upward. Analysts highlighted infrastructure investments as a key growth driver for Vietnam's economy in 2025, shifting away from external demand. With the U.S. interest rates expected to remain high and Vietnam's foreign reserves declining, monetary easing is unlikely. Instead, active public investment is anticipated to stimulate domestic circulation of funds. Financial stocks, as key beneficiaries of domestic capital circulation, attracted buying interest. Transportation sector plus 1.8%. Concerns about new tariffs under the Trump administration led to accelerated purchases of storable goods, boosting freight rates and raising expectations for strong earnings. Declining sectors. Agricultural 8%. After benefiting from strong exports to the U.S., the sector saw profit-taking this week. Wholesale sector, the steepest decline, with petroleum wholesalers like PLX and Vietnam National Petroleum under pressure due to falling energy prices and concerns over worsening earnings amid increased fossil fuel production under the Trump administration. Individual stocks, top gainers. STB, Saigon Thuong Tin Commercial Bank, is 11%. While no specific factors drove STB's rise, the overall strong performance of the banking sector, especially private banks, lifted its price. In contrast to this year's preference for large state-owned banks like Vietcombank and BIDV, next year's public investment-driven growth is shifting attention to private mid and small-cap banks. BMP, Bin Min Plastics, plus 10%. The stock rose on expectations of increased demand for construction plastics, driven by expanded public investment in 2025. Top decliners. DXS, Datsang Real Estate Services 11%, and DXG, Datsang Group, negative 12%. Both suffered heavy losses following the arrest of executives at their affiliated company, Giang Dien Tourism, for alleged involvement in illegal financial and land price manipulation. Despite a partial recovery since November, the scandal severely damaged investor confidence due to governance concerns. Next, let's take a look at this week's news. Links to the articles can be found via my Twitter posts if you're interested. First article, Vina Capital Chief Economist Report. Domestic factors to drive Vietnam's growth in 2025. Vietnam's GDP growth in 2024 reached approximately 6.5%, primarily driven by a recovery in domestic demand. Key contributors included expanded government infrastructure investment, recovery in the real estate market, and improved consumer spending. Exports to the U.S. grew by over 20% year-on-year in 2024, fueled by a 40% surge in exports of electronics and high-tech products. However, growth in exports is expected to slow in 2025 due to a deceleration in the U.S. economy and inventory adjustments. Consumer spending has been gradually recovering, with real retail sales increasing by about 6% in 2024. Although this growth is below the usual rate, it was supported by a rebound in tourism. In 2025, further recovery in the real estate market is expected to create a wealth effect, boosting consumption among the middle class. The government announced plans to increase infrastructure investment in 2025, including projects for new airports and roads, further strengthening the economic foundation. However, bold measures may be needed to offset the slowdown in export growth. The VN Index rose 12% year-to-date, showing resilience despite continued net selling by foreign investors. This stability is attributed to the undervaluation of equities relative to corporate earnings. Summary: in 2025, Vietnam's economic growth is expected to be supported by domestic demand. However, global economic uncertainties, including export slowdowns, make government policy responses critical. My thoughts. Vietnam's rapid economic growth has been driven by foreign direct investment and export expansion, particularly due to the shift in production bases from China amidst the US-China trade war. Next year, with the global economy slowing down, there are increasing reports predicting that Vietnam's growth will be led by public infrastructure investment. While the impact of public investment may not match that of foreign investment or exports, channeling the inflow of foreign capital into public infrastructure can promote domestic money circulation. This could gradually strengthen the domestic economy and reduce dependence on external factors, creating a more robust and resilient economy. It might be an interesting phase to shift attention to stocks related to domestic demand, given the growth prospects of Vietnam's domestic economy. Second article, Vietnam's timber exports hit record 17.3 billion. In December 2024, timber and timber product exports reached $1.55 billion, up 6% month-on-month and 16% year-on-year. For the entire year, forestry product exports achieved a record $17.3 billion, growing 19.4% year-on-year. The largest contributor was wooden-framed chairs, with exports reaching $3.1 billion by the end of November 2024. Other key products included living room furniture, wood chips, and bedroom furniture. The U.S. remained Vietnam's largest export market, accounting for over 55% of total exports. Growth factors included increased demand in the U.S. market and reduced inventories. Over 270,000 hectares of new forests were planted in 2024, with timber harvests reaching approximately 23 million cubic meters. Improved quality management of planted trees has also boosted trust among importers. The forestry sector aims for $18 billion in exports in 2025, making it a key growth industry moving forward. My thoughts. Last week's report highlighted the strong performance of agricultural and aquatic products in contributing to Vietnam's export growth. However, forestry product exports are also thriving. Forestry, with its long investment-to-return cycle, holds potential as a mid- to long-term revenue source, making it an area worth watching closely. Next article, Vietnam's e-commerce transactions surpassed $25 billion. In 2024, Vietnam's e-commerce market saw transaction volumes increase by 20% year-on-year, making it the third largest in Southeast Asia, following Indonesia and Thailand. E-commerce has become a vital distribution channel, particularly for large transactions like agricultural product sales during harvest seasons. Many businesses are utilizing e-commerce platforms, and cross-border sales by small and medium enterprises are rapidly growing. E-commerce accounts for over 60% of Vietnam's digital economy and, alongside online tourism, serves as a primary growth driver. In the domestic market, platforms like Shopee, Lazada, and TikTok Shop are thriving, while international platforms like Temu and Shein are entering the market. However, diverse transaction models have raised regulatory challenges. Addressing issues such as live commerce regulation, counterfeit goods, and cross-border transaction management will be critical going forward. Tax revenues from e-commerce have also grown significantly, reaching $4.8 billion in 2024, a 20% increase year-on-year. The Vietnamese government is working on new laws and regulations to further support the growth of e-commerce. My thoughts? Although Vietnam's GDP ranks 5th in Southeast Asia, its e-commerce market size ranking 3rd is intriguing. This highlights the country's high information sensitivity and digital literacy. Just as Amazon disrupted traditional retail by drawing customers away from toy stores, sports shops, and bookstores, the future of businesses hinges on their ability to adapt to e-commerce. The e-commerce market evolves rapidly, so when selecting domestic demand-related stocks, it's important to evaluate how actively companies are adapting to environmental changes, rather than adhering to conventional categories. Final article. UK's CPTPP membership expected to boost Vietnam's exports in 2025. In December 2023, the UK officially joined the CPTPP, expanding the bloc's share of global GDP from 12% to 15%. This move is expected to significantly bolster trade growth in the Asia-Pacific region, including Vietnam. For Vietnam, enhanced access to the UK market complements its existing trade relationships with Japan, Canada, and Australia, boosting competitiveness in high-quality markets. Vietnam's exports to CPTPP markets have already doubled, from $6.3 billion in 2018 to $11.7 billion last year, with continued growth anticipated. Vietnam signed a free trade agreement with the UK in 2020, and its exports to the UK increased by 11% last year. In the first 11 months of this year, exports grew an additional 19.5%. Key export items include mobile phones, machinery, textiles, and seafood, with further growth expected following the UK's CPTPP membership. The UK, as the world's sixth largest economy, offers significant opportunities for CPTPP member countries. It is expected to benefit from Asia's growing manufacturing and consumer markets. Additionally, CPTPP rules of origin, which allow for the use of components from multiple countries while meeting export requirements, are likely to enhance supply chain efficiency. This development is predicted to deepen economic ties between the UK and Vietnam, creating new opportunities for both countries starting in 2025. My thoughts. After leaving the EU, the UK has faced a prolonged economic slowdown. By joining the CPTPP, the UK can once again enjoy tariff-free trade within a large economic zone, similar to its EU-era benefits. For Vietnam, expanding trade with the world's sixth largest economy represents a major advantage. Although the Trump administration opposed such partnerships and China is not part of the CPTPP, incorporating economically strong countries like the UK could position the bloc as a third force capable of withstanding economic pressure from both the US and China. That's all for today's video. Thank you for watching.